So we think, a 25 basis cut is possible towards the end of the year, but interest rates in the US, we believe, are going to be maintained at current levels for a time. And we might find ourselves in a couple of months talking about the possibility of another rate hike. A small probability, but it's not a risk that we would want to dismiss.
Hi, Frederique. It's Dan here in Abu Dhabi. What's your view on the debt ceiling impasse in DC, and where is this likely going to land? We've been speaking to guests throughout the course of this week who say, look, OK, we have seen this movie before, but this time it feels different.
This time it feels different as well. The risk of an accident, in our view, is higher. We're not necessarily concerned about default because we know that the government can tweak who it pays in order to make its interest payments, but we are very worried about this brinkmanship. We're worried about market sentiment. In other very dramatic periods of market ceiling negotiations, when there was also in the background other issues in 2011, 2015, 2018, the market corrected between 10 and 17%. We might be in a similar situation given that there are fears of recession, of a US banking crisis. So this brinkmanship can be negative for economic growth, but also clearly for market sentiment. We think eventually they will come to a stopgap arrangement to try and shift the date of the X-day, of the critical date, a little bit into July when corporate tax receipts will be coming in. But it's really nail-biting time for politicians and certainly for the market.